Hello everyone, I'm Kunal Sodhani from Global Trading Center Shinhan Bank India, and we are here to decode, understand global macro trends, domestic factors, and its impact on several currency pairs. So, starting with the domestic factors, let's first understand what happened yesterday when the current account number was there. The current account came in surplus to the tune of $5.7 billion, or we can say 0.6% of GDP, versus the deficit of $8.7 billion, or 1% of GDP. So it's a good news where we are obviously having a surplus. Or if we talk about a trade deficit number, we still have a wider trade deficit number to the tune of almost around 27, $28 billion. If we turn down into the FPI flows for the year 2024, the debt flows have been positive to a tune of 65,000 crores, while the equity flows have been negative to flattish to around 9,000 crores. So with respect to flows, if we talk about the JP Morgan bond inclusion for Indian bonds is starting on 28th of June, which will be crucial to watch out in a staggered manner for a weightage of 10% in 10 months. And we are expecting an inflow of around $25 billion from there. So that is the key important parameter to watch out immediately. Apart from it, there are two other important parameters from the currency and the global macro point of view is the French elections, where the dates are 30th of June, that is the first polling date, followed by 7th of July. Now, this remains very crucial considering the euro dollar pair, wherein the far right Marine Le Pen is obviously leading in terms of the exit polls, we can say kind of an exit polls, as against President Macron. But President Macron has nothing to lose at this point in time because irrespective of him losing, he will still continue to be the president for the France till 2027. But it's about winning the number of shares, that is the votes. And what kind of mindset is getting paid is losing is winning is what the consideration Macron is having at this point in time. It's the second term for Macron, consecutive second term. So obviously, as per the rule, also he cannot be the president for the third term continuously or consecutively, but he can have a chance in 2032. So I feel it's a long-term planning for Macron, and that is why because France is itself having budget deficit issues, where there are chances of less government spending or more taxes. Where if even if they lose, they want to prove that probably Le Pen's party, that is a ruling party, may not also be able to take care of it. And once again, it may come back to the MPs of the Macron's party. So that's more of a political game, but certain issues where once I think Le Pen in the past has said that they want to be out of Eurozone. That was one of the trigger points where we have seen that she's leading, and plus euro dollar pair has also gone below 1.07 levels. So these elections have to be closely watched. The second important perspective to watch out is the July 4th elections for UK. Again, Rishi Sunak has called for an early election. The same issue. I think nothing much to do. Taxes are at all-time high. There are fiscal issues still prevailing. There are cost of living issues, education, healthcare, imprisonment laws, and many others to fight for. And I think that is why Stammer has been contesting. And even if Rishi Sunak loses here, though Stammer is leading at this point in time, it still possibly could be a win-win for him, where Stammer could not deliver. So both of them, both from the France perspective as well as from the UK's perspective, early elections are probably a political game, what we understand. But for euro-dollar pair, we anticipate quite a bit of volatility with 1.05 acting as a support. On the other hand, 1.0980 acting as a resistance. There can be a volatility during the next sessions to come on when it comes to the election time. Also for UK, we have seen 1.2450 acting as a support, while 1.2820 acting as a resistance. If we draw down to the dollar yen briefly touching around 160 levels again. Some verbal interventions have been seen. The highs were around 1.160.17 odd levels, where we see, in case if we are able to see a break of that, then possibly a test of 160 to 20 can be seen on cards. Otherwise, a slow cool off towards 157.60 may be seen as well. They still continue to have one rate hike for July, and they did trim the bond buying program for last month, but possibly that is also on cards, yes, for the coming month of July. Though there have been export competitiveness, but because of the levels being higher for the dollar yen or yen being weaker, we can say the other way around, inflationary pressure still prevails. For dollar rupee pair, if we talk about, then I think it's still in a very consolidation phase though we saw right side move towards 83.67, but we couldn't break the NDF highs of 83.72. So 83.72 once again acts as an important resistance. Till the point the NDF highs are not broken, we are still contained within this consolidation band, while a close below 83.30 would be required, and that could be one of the triggers where the inflows from bond market, which starts from 20th of June, can be one trigger point where we may see rupee getting appreciated. So mind that, and the range, if closed below 83.30, 83.10 levels can also be tested. That's all from my side, friends. Thank you so much and have a very good day. Thank you.